Hello and welcome to this Friday's morning market briefing. We've got lots to talk about, but firstly, global CEOs flock to China as tensions mount over export glut, as well as that Russia and China veto US resolution calling for the immediate ceasefire in the Gaza conflict. We've got lots to talk about in the charts also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. The first article to talk about is in relation to, Tim Cook and the likes of others, US CEOs in China. Now, the world's leading CEOs such as Tim Cook and Noel Quinn are attending meetings in Beijing, where the Chinese version of the Davos conference is believed to be taking place this weekend. This comes as international pressure mounts on executives over the issue of a possible Chinese industrial oversupply, which could cause an international train accident for world trade. Now, this is obviously a very interesting article to talk about, largely because it kind of wraps in so many different kind of topics that we're always talking about. Let's just note a few here. We're talking about China and we're talking about the US, as well as that, more importantly, we're bringing the two together, talking about US-Chinese relations. We, of course, have been covering that in great detail recently, as US-Chinese relations at the moment are believed to be at a, multi-year low, so very low period for those relations. And we know that there's been some issues over the Taiwan Strait as well, and those geopolitical issues within Russia and Ukraine has also added to the tensions between the two nations. Not only that, but obviously Biden's presidency is following on from Trump's presidency, where he really began the crackdown on, the Chinese oversupply into the US, and we know that tensions mounted around that, and that's kind of continued to mount up until and through Biden's presidency, when we did see Biden once again implement certain trade restrictions on China, and this is only likely to increase and become exemplified when we then see in 2024 those presidential elections, and we start to see either Biden or Trump making their big claims over how they'll kind of beat Chinese power, as ultimately Trump or Biden is going to try and prioritize US growth, US international power, geopolitical power over the Chinese geopolitical power and economic power, which of course is growing at a monumental rate. But more importantly on this article, we of course do have the likes of Tim Cook, the like of Darren Woods, and the like of Noel Quinn, which are all heading to this Beijing Annual Development Forum. This kind of article takes me back to a few months ago, when we were talking about the issues that many of these global CEOs were finding with China. We of course had the San Francisco conference, where we did see Chinese leaders come over, and we did see then the global CEOs interacting with those Chinese leaders, and of course that was kind of a highlight of US and Chinese relations, the more positive side of the relations over the year. That said, we also had certain issues going back to, I can't remember the exact conference, but ultimately, ever since the Chinese spy balloon was shot down over the US, we know that it's been, Xi Jinping passing on from, many of these conferences or meetings where he could have met with, certain officials, government officials, and of course corporate officials such as Biden for representing the US, and also the likes of Tim Cook and others, which of course have historically been well invested into China. But I think the most important article to note in regard to this is of course that Vietnamese trade article that we did talk about quite some time ago now, maybe back in October, but ultimately that article did highlight how these global CEOs were starting to diversify their supply chains away from China and into other Southeast Asian nations. And Vietnam was a key nation which was noted by these officials, by these key executives, as an area of great interest where they wanted to expand their production into and move those supply chains away from China, where of course we have that greater political issue, geopolitical issue, and also the recent property slowdown which is affecting Chinese markets. And this was largely driven of course by Biden's trade deal with Vietnam, which of course came as a very kind of monumental piece of kind of foreign relation legislation, if you would call it that. I'm quite, I'm not articulating that correctly, but ultimately I think you're getting what I mean, which is that, prior to this article, we were kind of talking about, these global CEOs more or less diversifying their supply chains away from China. But now we're starting to see, maybe some bettering relations between these global CEOs, between these US CEOs and Chinese officials, which then may, of course, bring back that investment that is kind of being brought away from China back into China. So, a very important article that we're noting here, and a very important detail to definitely analyze. That's not that's all to talk about, but the next. But getting straight into it, with nearly 90 CEOs as well as heads of organizations such as the IMF attending this event. The US executives, however, are of greater significance, not just due to the fact that they're returning to the event, but the fact that they're returning to this event in a greater number than before. This all comes at a time where bilateral tensions between China and the US are very high. We know that those kind of relations are very low at the moment, and therefore, there's been some worries over, whether, this Chinese-US trade will still continue into the future. Of course, much of the US supply chains still depend on China, but, the kind of diversification of these large global CEOs and their companies away from China and into other areas like we noted with Vietnam is of course creating some very serious worries for someone like China, which of course depend on this kind of process of them being the very start of the supply chain, and then the US being the people that then consume the goods and sell them. So very important article to note once again. Now it seems that China's second-ranked official, Premier Li Qiang, will preside over the event. Reports are claiming that he will cancel a roundtable with the CEOs, but this has not been confirmed, as this is one of the few chances for Chinese officials to speak with US CEOs. Xi Jinping has seemingly signalled his support for the event by visiting an enterprise with foreign investment this week, with his cabinet also announcing support for foreign businesses. China's been struggling recently, of course, due to weakening demand from a property slowdown, which is now also affecting manufacturing. The foreign and domestic investors into China have since been rattled by a slump in the property sector, with a lack of government intervention worrying some on the matter. So very important topic that we've noted here, and definitely keep it on your mind as we do go into next week. Next article to talk about though is to do with Russia and China. Now Russia and China have now surprisingly vetoed a US resolution of a Gaza ceasefire. This comes in an act to block the US's clearest attempt to intervene in the conflict. Now, of course, we've stayed on top of this conflict greatly recently, as it's of great importance, especially in regards to certain assets such as gold and oil, which have been affected greatly by this conflict already. And we do know also that, of course, there's a great deal of, a humanitarian impact from this conflict, of course, and that's, of course, important to understand and keep a note of. But ultimately here, we are highlighting the fact that, that monumental decision by the US to call for this resolution for an immediate ceasefire within Gaza has now been struck down by, the key US geopolitical enemies of Russia and China. And in some ways this would seem very unlikely. You wouldn't expect this. You would expect those two nations to be the ones that were traditionally opposing Israel, traditionally opposing the US, and so always trying to back whoever is kind of the enemies of the enemy of my enemy is my friend, is kind of the situation that you would expect from this matter. But ultimately, it seems like Russia and China are just trying to disrupt the US's efforts here in calling for an immediate ceasefire. So, we do know, of course, that the current actions by the Netanyahu war cabinet government is coming of, great interest to the US. and is ultimately creating a great deal of strain between the two nations, which historically have very strong ties. And of course, we do know that the US does fund a large part of the Israeli military budget. So, these two are, connected massively. But ultimately, we've seen the US kind of carry their support for Israel's kind of war efforts within Gaza ever since the October the 7th massacre by Hamas. But ultimately, as we've kind of seen the humanitarian impact on civilians within Gaza kind of grow, we have seen, the Biden administration slowly start to withdraw their support for Netanyahu and, the kind of IDF's campaign into Gaza. And, as a result, we've seen those relations strain. We've seen Biden call for Netanyahu to smash those plans which were made out to set up an operation into the Rafah area of the Gaza Strip. So an attack into that area, which of course is a great fear to the Biden administration, as that is the key area which has been sheltering civilians which are trying to stay safe as a result of this conflict taking place. So, that was of great worry to the Biden administration, and that's why they've seemingly called for this US resolution, because Netanyahu just wasn't backing down on it, and we know that that's the case. And ultimately, now we're seeing Russia and China break down that attempt. So, with the Russian and Chinese vetoes being the sole reason for the resolution being defeated, only one other nation to note voted against the resolution, that being Algeria. The measure that the US proposed called for an immediate and sustained ceasefire as a part of a wider deal to release hostages held by Hamas. This comes at a time of strained relations between Biden and Netanyahu, with the strained relations arising from Netanyahu's lack of interest in establishing something of a ceasefire and interest instead in a Rafah offensive, which Biden fears, of course. And the motion by the US now marks the most significant breach between Israel and the US's relations since 2016, where there was a dispute over the settlements in the West Bank. According to Netanyahu himself, during a recent meeting between him and Antony Blinken, Netanyahu insisted that an assault on Rafah was essential to defeat Hamas. The EU has now also issued a statement condemning a potential assault on Rafah. So very interesting things taking place now within Gaza and Israel, especially in regards to US and Israeli relations. From this, one might expect, of course, maybe gold's price to once again rise after dropping after we did hear the US call for that resolution. And this is obviously going to create a great deal of volatility within markets such as oil and gold. So keep your eyes on both those markets, and also keep your eyes on this topic nonetheless. Next article to talk about, though, of course, is the charts. Well, we've covered the articles I meant, and now, of course, we're looking at the charts. To begin with, of course, we are on the US 30. Now, of course, earlier in this week, we did note how the Fed ultimately held interest rates at their all-time high, and actually provided some more dovish rhetoric in regards to the future of US interest rates. And as a result, the picture for the US economy was very bullish, and we have seen assets like the Dow Jones then rise to the upside in a significant fashion. And as you can see here, ever since we did hear that news, we've seen price break above those all-time highs and push quite significantly above those previous highs. We did note, however, that with great bullish momentum, we breaking all-time highs or highs anyway, we do often see price kind of retrace, come back and hook back to that area of price which it broke out from. And so we were expecting that kind of retracement to take place, and that is kind of what we're seeing here now, with price kind of making its way back down after a great deal of bullish momentum recently. So a very interesting kind of topic to note here, and yeah, definitely keep your eyes on the US 30, as going into next week we could definitely see price make its way down all the way to the 50% mark, before then, of course, continuing to the upside. So definitely keep your eyes on the US 30 as we are currently experiencing that retracement. Next to talk about though is the dollar, where we are seeing price continue to push the upside, a continuation of that bullish momentum on the charts, and this is of course kind of actually contrary to what we're seeing on the US 30. One would expect some bearish momentum following a decision like that by the Fed, which is what we initially saw, but of course following more recent data and more news in regards to world tensions, we've seen price obviously continue to the upside for the dollar. Keep your eyes on the dollar going into next week. Price action's kind of just been insane. So next article, next asset to talk about, is Euro USD, which is now nearing this bottom in the market. So a very interesting opportunity which is kind of forming for the Euro USD. If price now comes into contact with this area, we could definitely see some bullish momentum to the upside. But the question of how far price would make its way back up before just continuing this trend that we've seen now form on the downside for Euro USD, it's hard to kind of tell. So definitely keep your eyes on Euro USD. Next asset to note is pound yen, of course. A key asset which we always kind of note, a key pair, key foreign exchange asset that we've kind of noted many times, and price is currently sitting around the very even level of 190.7, and so a very interesting kind of level at the moment, but ultimately price is interacting with this key 50% Fibonacci retracement level, and this of course is an area where one would usually expect a great deal of bullish momentum, bullish liquidity to kind of be waiting, and we are kind of seeing price stall out at that area right now, so possibly that's hinting towards that fact, that being the case for pound yen at the moment. So definitely keep your eyes on pound yen, as this could be hinting towards some very real bullish opportunities. That said, prices have been so overbought recently following such a strong bull run after that news came out recently in regards to the Bank of England and Bank of Japan. Ultimately how much higher can pound yen move within the next few weeks after such a significant bullish move? It's hard to tell. Next asset is Bitcoin though, which has been overwhelmingly volatile recently, but is kind of creating a very interesting pattern at the moment, with price now trending to the downside. So price did make its way back up to this area of liquidity once again, and it has seemingly sold off from that area and is now making its way to the downside. So whether price will now continue to the downside, or in fact it will come into contact with some area of maybe a Fibonacci level or something like that and then continue higher, that's for you to decide. But price is currently around that 61.80, so still very interesting levels for Bitcoin to interact with, but definitely prices just been so volatile recently, things are hard to judge. Next asset is gold though, which saw a very strong move to the upside recently, obviously following the Fed once again, but ultimately has sold off yesterday and now continuing into today, with price now even making its way back down to this bottom of this bullish flag that we did see form not too long ago. So definitely keep your eyes on gold. Last asset to talk about though on the charts is of course oil, which is kind of has been retracing slowly recently, but ultimately is kind of stagnating and ranging in this small area at the moment. So definitely keep your eyes on oil as a result of the tensions in the Middle East and all of that. Obviously oil's in a very hot spot at the moment. That's all to talk about in the charts though. Lastly to talk about, of course, is the economic calendar, pardon me, where we're getting a great deal of data today. Now, firstly, we will be getting some British consumer confidence. We will be getting the British consumer confidence figure, followed by some British retail sales figures. Followed by that, we'll have the Eurozone Euro Summit, and then the ECB's General Council meeting, German business climate figure, followed by the Canadian retail sales figure, and then some Fed officials doing their speeches today. Obviously, most of this data is already out, as you can see here. It's because I'm recording this video late. I wasn't able to record it the usual time. I'm sorry about that, but at least I'm getting one out to round off the week. But yeah, I hope you have a great weekend. But that's all from us at Wildwood Capital. We've got lots in the articles, lots in the charts, and lots in the economic calendar. Have a great one. See you later. Bye.